Well, yes, in focus we are having Craftsman Automation, and over here in this stock, P player Marina Singapore has completely exited the company, selling 5.5% stake worth almost 370 crore rupees. And the key buyers include Abu Dhabi Investment Authority, White Oak Capital, and also India Acorn ACVA, which have combined basis they have acquired 3.3% stake in the company. But what does the company do? The important thing is it's one of the largest players in the machining solutions, especially for the automotive segment. Now this is coming in for the engine components which they supply, and also for the power segment and the industrial solutions. Now in the non-automotive sector, they also provide solutions for the wind and the storage space itself. Now let's look at the return ratios, where the ROC and the ROE numbers on a CAGR basis is comfortably above the 15% mark. But let's look at what are the important triggers going ahead for the stock. And the management has stated that the third quarter might see a seasonal dip in the revenue, but the fourth quarter would see a spike in it. Apart from this, from FY24 onwards, the revenue growth is expected to come in at almost 20%. And lastly, they have also mentioned that there is an impact of a high cost inventory on the margins, which are expected to even out in the coming quarters. That means the margins are expected to increase going ahead. Apart from this, there is a cyclical recovery already happening in the auto space, especially in the commercial vehicle segment for the heavy vehicle segment. And lastly, the company is also moving from its tax regime with almost 34%, which was earlier, with the MAT credit coming down to the almost 26% levels. Lastly, the stock has also been buzzing off late, and the stock is up almost 40% over the last 6 months.